Hey, good afternoon and welcome to my channel. This is the Turtle Trader, where we talk about some of the economic events and things going on in the stock market. So it looks like today we definitely get a bit more of a red day, and this we're looking at the stock heat map of the Standard & Poor's 500. It's a bit more heavier weighted on the technology side of things. You can see there's a lot more red. We see that minerals, utilities, metals, industrials are doing a little bit better. So that's an interesting indicator. Financials, we got mixed basket going on here. Some are red, some are green. And definitely when we look over at the NASDAQ side of things, we see that big tech and tech overall is just taking a hit and it's getting a really, really red day. And we can also take a look at the Russell 2000 and notice that small caps are having a pretty bad day and really getting beaten up today as well. So what's causing this to happen? Well, you know, Federal Chair Jerome Powell was speaking just yesterday, and then the numbers came in today, and they did not really come in too well. JOLTS came out pretty okay, but we do see that ISM manufacturing prices has been going down, which is and ISM manufacturing PMI as well, which is kind of an indicator that the economy is slowing down a bit more, which may be hinting as to why there's a little bit more fear, a little bit more volatility in the markets. We can see that with the VIX, just because it's been kind of going up, and it really did spike today, and it's at 16% right now at the time of recording this video, which is about 11:40, almost 11:40 Central Standard Time. Going back to the economic events, we do have some more economic events going into this week. I don't have the earnings calendar in front of me right now, but I did take a look at it earlier this week, actually this weekend, and there's not much earnings going on this week. So, make that what you will. I stayed out of it this week. I had this assumption that we may see some kind of a pullback, especially when we kind of this overextended. When you look at the S&P on the daily time frame, we just had this really nice breakout to all-time highs, and we see price kind of rounding out, and I wouldn't be surprised that price is kind of doing some kind of price discovery right here, where it's broadening out, and we want to see where we're going to find support. And I'm a little bit cautious going into this, so for me personally, and I like to take longer positions, I'm more into holding different sectors, individual sectors, than this overall ETF at this present moment. Now, with that being said, we are kind of rounding out. I would not be surprised if we do see some kind of retest of this level. We do see it kind of coming in here, potentially bouncing, maybe going sideways. But this is a key area. This is retesting the all-time highs, which it rejected from twice before. So make of that what you will. We definitely see with QQQ that it's still not really breaking out just yet to all-time highs and blue sky territories, and it did have a pretty gnarly red day today. With that being said, this can just be a higher low in this trend sequence, so there's nothing to fear here. We want to stay over this line in the sand at 449.35, maybe a little bit lower, but we definitely want to stay over this key area. This is definitely an important zone, so we can find any kind of lower high to be set anywhere over here, and that should be fine. This may be a nice opportunity for people to get long if we were to come down here in this week and potentially bounce off this. So this might be a nice buying opportunity right here. We had this kind of area, which is a bit inefficient. We did have this wicking, but it is still an interesting area, just because of the nature of these wicks, where price hit this level and quickly rejected, and then another time price hit this level and quickly bounced. So it's coming here again, and it did bounce. So that's a good indication. Now look at small caps. I really like the way the small caps are kind of setting up right now. It is going to be a little bit more of a it's going to be more of a riskier idea and proposition to kind of go long on small caps, but I think the opportunity will be a little bit better, just because small caps have been kind of getting hammered and they've just been in this massive range for quite some time. We can go to the monthly, we can go to the weekly and the monthly time frames to see it. It's just been in this massive range for uh, a year and a half period, and then we did see some consolidation and it's starting to kind of break out. But this is good the way it is breaking out. This is a healthy way to break out, and if all the stars align and we're not really in a recession, and small caps don't take a massive hit in terms of productivity and the economy as a whole, we can really see small caps really recapture this level, this almost 250 all-time highs, and break out in 2025 and 2026, and um, really be one of the market leaders or one of the sectors that lead the market. So I got my eyes on it. Going back to the daily time frame, we do see it setting up pretty nicely actually for this really nice bear flag consolidation right over here. Or I'm sorry, and we see it setting up a really nice bull flag consolidation. The brush. So it came in and it had this really massive breakout, and I kind of called it. I felt it. I felt it deep in my bones. Something was amiss here, and there was still like a lot of economic uncertainty. The magnitude of this breakout and these, sometimes there's a breakaway and go, a gap and go, and that's usually from some kind of event or some newer over release, and I get that. But I thought this was just maybe a little bit of too much in terms of, okay, they're gonna cut rates, but yes, I understand markets are forward looking, but we haven't really seen what is gonna be had from these rate cuts. We don't even know if we're going to go into a recession. So I think a lot of people jumped the gun on here, and they were maybe caught off sides with these rejections coming into that key level right here. And I just had this feeling that, you know what, it's probably going to come back and maybe fill some of these gaps, because this magnitude with just a straight parabolic 90-degree angle, if you think about it, really. Now, with that being said, Price did a really nice job of coming back to the support level after this kind of contraction and breakout, and since then what had happened what it did was kind of set this lower high right here, and this was a real nice area to come in. And again, we have this really nice bear flag, I'm sorry, and again we have this really nice bull flag consolidation right here, which may be another potential area to kind of accumulate more and maybe get long around 215 if you're okay with taking this potential risk into small caps, with the potential for a recession looming. With that being said, I want to go over to oil supply, the U.S. oil supply, and we do know that it's kind of been in this downtrend. And what's been sparking this downtrend? What's the economic catalyst that's been sparking this downtrend? Well, demand is still the same, but supply has been going up. And what's going to happen is you're going to have this equilibrium matrix, and that's kind of what price is discovering right now, is where is this price equilibrium between supply and demand, because the United States have just been really pumping a lot of oil lately, a lot of crude oil, and they've been doing a good job with it. And truth be told, I think they should have been doing this many years ago, maybe like when they were having that Keystone pipeline I think it was between Canada and Mexico. They should have kept that around. I want to look over the US 10 real quick, because I do in fact like bonds. I'm a big believer in bonds, government bonds, not really corporate bonds, just because they are a little bit more inherently risky. With that being said, bonds look to be holding up at a relatively nice level. Bonds look to be holding up at a relatively nice level. They are technically in this really neutral zone. If we're going to kind of jump to the weekly time frame real quick, they kind of are at this really interesting bull bear neutral zone, where we're not really dipping down into these areas here. We are kind of holding up. We're getting some beautiful hammers on the weekly time frame. which are nice, and the monthly is kind of setting up maybe for a 3 white nights. Maybe we come back to this area to 101 going into next month, depending on if I think there's going to be a rate cut in November and maybe in December, 25 basis points across the board for those 2 months, where we may see the 3 white nights come out and a catalyst, that fundamental catalyst, causing the 20-year to kind of maybe go back up to this area and then potentially get back to this 103 level, maybe end of year.